Good morning. Today is December 5th. We are at the end of the year, and the Jaguars did pretty terribly yesterday. Um, but let's go ahead and get into the numbers. Um, One of the things I wanted to look at was the 10-year, and it keeps falling. Um, But last week we did two videos. So we did the weekly trend and then we did the monthly, um, showing all the numbers for November. So let's jump into that. All right. So what we're showing from a weekly basis, we're at 345. And we ended, so last week it was at 340, right? And remember, we said we hit that new like lower low almost. Um, we got this 1112 at 325. So, and I also pulled up the monthly because I wanted to look at that. So you've got 349 for November, right? Um, and then we're showing 345 on the week. This is something interesting that I also looked at. I basically just took the annual number and wanted to look at it that way, because I know a lot of people say like zoom out, right? Sometimes when you're looking at stuff. And when I got started, I don't even think Domus was around. It would have been nice to be able to pull this, but or maybe this only pulls back like 5 years. I'm not sure. Um, but we're at 209. Then we've got an increase. What is that? 15,000. Another 15,000. Another 15-ish thousand, right? And then we go from 250 to 300, right? So we've got COVID here. We're at 256, and now we're at 355. Um, so just food for thought, looking at that like appreciation over time. Um, and so we've got the weekly, and we're at 345 for Jacksonville overall. I can't break this down. Um, as far as price distribution on the weekly, I don't think I can. Anyways, yeah, it doesn't let me. So closed sales are, where are we? All right, so closed sales are at 342 for the week. It's the lowest week of closed sales, it looks like, um, other than this 278. But remember, that's hurricane, right? And again, I'm attributing this to lack of inventory and lack of buyers. So it's two things. It's not just one thing. It's not like everybody walked away from the housing market. People still need a place to live. But half of the entry level buyers, can't afford to buy a house anymore. Buying a house, owning a house, being a property owner is a luxury now. And I don't know when the last time that was, but it is what it is. We're still looking. So just to let you know, from an investment standpoint for, flips and rehabs, we can't find anything that makes sense. There's not enough inventory. And so even on the wholesale side, so we're looking at, potentially getting into some land, to do some infill because we think there might be a little bit of a gap there. Um, but that's kind of what we're looking for. I mean, we're actively searching for properties and we're actively making offers. And we're either getting beat out or the people are just like, hey, we're just not going to sell it at that number. And it's like, okay, we get it. Um, so let's look at percentage of list price received. And we are all the way down to 96%, which is, again, not terrible to me. At 92%, I'll feel a lot more balanced out. We did the monthly numbers on the percentage of cash sales, and we basically showed that the cash purchases are happening at the front of the market and at the back of the market. So your entry level homes and then your luxury homes that aren't affected by mortgage rates or anything like that. So keep that in mind when, if you're an agent, or if you're an investor, or if you're a buyer, right? If you're a retail buyer and you're looking at those markets, you're still competing in different markets. So like it depends on what every market, as far as price point, even just in our like 3 county little area, it's not very little, but everybody in each price point is going to feel the market a little bit differently. So percentage of cash sales is still about 30%. And on the monthly, we saw the same thing last week. Median days on market. I do, and I have been saying this for a little while. It looks like we are starting to see seasonality again. It's hard to say because we are in a decline because of interest rates. Like it is what it is. And so we're at 49. Keep in mind, depending on your price point, you're going to feel this differently, right? So, but because the pricing is on a decline because of interest rates, and we're waiting to find out what that support level is. Everybody kind of feels that differently. But as far as the seasonality, we are, kind of starting to see it again. So pending sales. So pending sales is at 385, a little bit higher than that week in November. July they dropped. Remember, we're watching this trend start to go down, but keep in mind as far as like inventory, right? Let's look at what our active inventory is. We know that this number has climbed. But what you're also going to see is that the number of new listings hasn't really changed. So the same amount of people essentially are kind of looking to sell, but you can start to see that it's like tapering off as far as like the inventory, right? And again, that could also be seasonality, right? So compared to, at this low point in April, we only had 2,200 active homes on the market, right? And then let's go into new listings. This is what I'm talking about as far as like, it's not like more of them are coming to market, right? There is an influx, and you are seeing that. It's that more are staying on the market. Because of whatever reason, but you are starting to see that taper off. So number of new listings basically went down by 30%. So the notion that there's, again, and I'm, take the information however you want to, but I mean, this is what, almost a 50% decline since September, October, right? Partially seasonality, but there's also kind of an inventory question for sellers as far as like, do I want to sell? So last time we were at this like 500 number, right? Low inventory. What is that? October 1st, right? For that week. So the number of new listings, yeah, it spiked up here. I think everybody got like, hey, we need to sell, right? And then at this point, people are like, yeah, we're done. Not a good time to sell, right? So even from an investment standpoint, it's hard to find the inventory that you want. And we're also looking at this, right? So you've got and we're also looking at this. So you've got the 10-year, and keep in mind the federal funds rate is the overnight rate that like banks pay, right, for money. It is somewhat correlated to the rate that people pay for mortgage rates. But look at this. You've got the 10. This is more closely going to be what you're paying for a mortgage. Adding your points in, right? Or your margin for the mortgage broker. So you got 3 plus 3%. You've hit a 7.3% mortgage. And then down here, you've got a 3.5 essentially. So you got a 6.5% mortgage. And I mean, everybody's under the impression that these are going to keep going down. So when we go back and look at our inventory, as far as new listings, we're kind of setting ourselves up for for Rally 2.0 again. And I know I'm not, you know, if you guys have been watching these videos, you know what I'm talking about. It's not like we have all this inventory coming to market. If we want to loosen up that inventory, it's got to be appealing for these people to move up. If not, they're not going to, right? So you've got all this inventory that's trapped, and you've got all these builders that are like slowly starting to like release inventory into the market. So that's kind of what we're looking at. Here's the other. If you guys follow me on any other social media, I got really kind of heated about the Go Banking article about the foreclosures, because it said that 50% of the listings in Jacksonville were foreclosed, and I was like, that's bananas. That's not real. So I pulled up the actual numbers and the number of foreclosures, pre-foreclosures, combined those together, and it was still like extremely low. So percentage of distressed units, we're still less than 1%, right? And here's the thing. So we have gone from last week to this week. They quadrupled. So we have, I don't even know how many. It's not that many, right? And let's go to off market to see what could potentially be coming to the market. So this is the docket for December. There is almost nothing. I think Wednesday you've got 9. And keep in mind, if you haven't seen these foreclosure dockets before, a lot of them cancel beforehand, bankruptcy, whatever. But when I start seeing this have, I don't know, 9 to 15 per day, that's when I'm starting to raise a red flag or raise some sort of alarm. So this is Duval County. This is Clay County. There's nothing. So I still have if I were trying to make a living buying properties at the auction, I would be in a lot of trouble. Keep in mind, there's institutions and everybody else buying at these foreclosure auctions. Like, as an individual investor, I would be lucky to buy one, right? And might be coming with bad title or something. So keep that from a distress standpoint. And on the monthly chart, it's showing the same exact thing. So, yeah, if we can help you with anything on the retail side, please reach out to Carrie. As far as what we're looking for, we're still looking for properties to buy. The inventory doesn't exist for us, either from what we're hunting for, or even at the auctions. So we are looking for those infill lots, which we weren't looking for before because we're looking for some bigger stuff, which we're still looking for. We think some people may have been on the commercial side getting stuck in some bridge loans they're not going to be able to get out of. And as far as retail projects, we've got King's Landing, affordable home community on the northwest side. The plans in there are new for 2023. They're super cool. And then we've got Johnson Commons. A lot of people are reaching out to us about that. We're going to do a kind of like a VIP video on what we do know, probably this week or next week, because we're going to be releasing reservations in January. So we're getting some of that information out, kind of trickling it out as we get it. And then we'll start taking those reservations. So, and then King's Landing, we're also going to be taking reservations in January. As of right now for inventory, like, we don't have that much. Like, we have Ellis Road, we have those 19, but none of those are completed. Some of them will be completed in January. Twin Hills, we have a model because somebody, their loan got denied. So we have a model that we can show, and we still have those. We have those 3 houses under construction. We have basically one that's move-in ready. We have Gillespie. That's a cool, I think it's 1748 model, which is what will be at King's Landing. So that one will be ready end of month or January. But you can check out all the Breeze Homes inventory, Breeze Homes, jax.com, and then get with Carrie as far as any other retail inventory. There's just not much. on our end. So, and you can see that even on this report, the number of new listings coming to market is lower and lower and lower. So keep that in mind. Lower inventory. These rates seem to keep going down, but let's see what happens. Everyone have a good week. And if you need us for anything, call my team. Thanks.